everybody. Welcome to today's fundamentals. Hello, Pedro.
Hello.
So what's up in the FX market?
Well, the euro is moving in a downwards trajectory in addition to the British pound remaining perhaps in a sideways fashion. Now, one could say that the dollar strengthening is stemming from the FOMC June meeting minutes that were released yesterday. So within those minutes, what we could see was there's a certain degree of fear within the Fed policymakers that inflationary pressures are still high. Despite having a very tight labor market, it appears that the pause was in order for the Fed to gather more information before proceeding further on. So based on what we've seen and what we've read, one could assume that in their next meeting, the Fed would most likely, is likely to hike, given the certain economic data is stemming. So high inflation and a very tight labor market would allow some leeway for the Fed should they decide to hike by 25 or even 50 basis points. Personally, I think that given what we're seeing, if the employment data that is coming out on Friday comes in as is expected or perhaps even higher, that could make the case for the Fed to hike by 50 basis points, albeit though a relatively extreme scenario. But based on what I'm seeing and based on what I've read in the FOMC meeting minutes, it would appear that this concern about persisting inflation pressures, in particular core inflation, appears to be worrying the Fed policymakers, which is why the pound may be weakening but remaining neutral in addition to the euro weakening. Yet, in regards to the pound, it would appear that the comments by Governor Bailey, that the bank may need to hike and that inflation pressures are still high, it would seem that the pound is holding its own against the dollar in anticipation that there are more rate hikes to come from the Bank of England. The Aussie appears to be slightly up in today's trading session. Now, the Aussie during yesterday's trading session slightly weakened as we neared their trade balance during today's Asian session, yet after coming in higher than expected, it appears that the Aussie has strengthened against the dollar. What is surprising though is that China's trade data is still worsening. So in the long run, I would expect the Aussie to perhaps weaken against the dollar. And the dollar against the JPY is moving in a downwards fashion. So we've said that there's a general strengthening of the greenback across all pairs. Yet, against the Japanese yen, it would appear that traders are investing, I would say, in the Japanese yen as safe haven inflows. So during times of financial uncertainty and perhaps worries of recession, it would appear that the Japanese yen is gaining against the dollar. So despite gaining against other pairs, it would appear that the dollar yen in particular is moving in a downwards fashion.
And how about US stock markets?
Well, US stock markets are moving in a downwards trajectory. As the greenback strengthens, it makes it more expensive for overseas investors to buy US stocks, etc. Therefore, there is less, I'd say, demand for US stocks, so they're moving in a downward trajectory, at least for now.
And what about oil prices?
Oil prices are moving up. So OPEC's two-day seminar started yesterday. And what is interesting is that during this seminar, Saudi Arabia's energy minister stated that the collaboration between Russia and Saudi Arabia is stronger in terms of production cuts together, and that they're working in unity, I would say, that to bring oil prices at a higher level. Yet it would appear that the UAE does not share this sentiment. So the United Arab Emirates have stated that they're not going to be doing any more voluntary oil production cuts in the near future. Therefore, despite Saudi Arabia trying to present this image, I'd say, of unity of OPEC, it would appear that the members themselves do not share this image, or at least this sentiment. So even though oil is moving in an upward trajectory, on a more macro level, I would expect oil prices to come down due to worries of a recession and the UAE stating that they're not going to be doing any more voluntary oil cuts in the future, would essentially mean an increase in supply and a reduction in demand for oil.
Mm-hmm. And what's in today's calendar?
Well, we have a busy day today. We're noting the UK's construction PMI figures, the Eurozone's retail sales, the US ADP employment figures, the initial jobless claims, Canada's trade balance. Now, what is interesting is Dallas Fed President Logan is due to speak today, and the US ISM non-manufacturing PMI figures, which are anticipated to support the US dollar. So, based on what I'm seeing, I would expect that the ISM non-manufacturing figures might come in lower than expected, so they might weaken the US dollar. We also know the US job openings, which are anticipated to weaken the dollar. The EIA crude oil inventories, which may be of concern to oil traders. ECB policymaker, Nagel is due to speak. And US Treasury Secretary Yellen is due to travel to China today. Now, US Treasury Secretary Yellen traveling to China is interesting. The US appears to have the upper hand in terms of negotiations against China. So, worrying economic trade data, excuse me, not trade data, economic data from China would give the US a bit of an advantage in negotiations, as it would appear that China now needs the US and the global markets a bit more than what was anticipated about a week ago. So perhaps we might see some positive sentiment coming out from their meeting. And lastly, in tomorrow's Asian session, we know Japan's all household spending on month basis.
Great. Thank you, Fedor, for your time. And everyone for watching. Join us after a short break for technical analysis.
Hello and welcome to today's technical analysis. So starting off with the euro against the dollar, as you can see, it's been validating our downwards moving trend line incepted on the 23rd of June. Now, note how it came down to S1 at 1.0845, failed to break below and moved higher. So it's validating our downwards moving trend line and support at S1. So it's a downwards moving triangle. I would not be surprised if the price action moves to test our downwards moving triangle and then, downwards moving trend line, and then moves lower, breaking below S1 and towards our S2. So for the pair, we're maintaining a bearish outlook, as we said during the fundamental session, following the FOMC June meeting minutes. It appears that markets may be anticipating further rate hikes by the Fed. Core inflation is still far too high for the Fed's liking, so far away from their 2% inflationary goal. Therefore, we anticipate more hikes by the Fed. As a matter of fact, personally, a 50 basis point hike would not be out of the question for me, considering that they've remained unpaused. If core inflation continues to persist and comes in higher than expected, then they might need to take drastic measures following their pause. Whereas, had they hiked by 25 basis points, it would have been more easy to continue with 25. Yet, by remaining on pause, I believe that the gates for a 50 basis point hike have now been opened. Nonetheless, we're maintaining a bearish outlook for the pair, despite these slight narrowing but still wide Bollinger Bands. Therefore, I would maintain a bearish outlook for the pair, moving lower, breaking below S1 and moving towards S2. So for cable, note how it's still validating our S1. Look at the wicks touching upon S1. All of the opens and close, so the bodies of the candles remain above our support at S1. Is broken above our downwards moving trend line and is now moving in an upwards fashion. Note how it bounced off the 50 RSI mark right on our S1 level, right here. Failed to break below, moving higher. RSI moving towards 70, implying a strong bullish market sentiment regarding cable. So in the time gap between fundamentals and our live technical analysis, the BOE governor has stated that he believes that the banks are passing on higher costs on to customers due to the higher interest rates. Now, this in turn may stifle economic growth in terms of reducing consumption, as if it's harder for you to borrow money, then consumers may be more incentivized to save more rather than spend, therefore reducing economic activity. So even if it is moving in an upwards fashion, I think it's more to have with future expectations of higher interest rates, so further rate hikes by the Bank of England. We've said again and again, I personally believe that there's a 50 basis point hike down in the pipeline that's coming, and then another 25 basis point hike, perhaps a terminal rate of I'd say another 125 basis points in total. But for now, we're maintaining a bullish outlook for the pair, given on the technicals. On a more fundamental basis, on a macro level, I do anticipate the British pound to weaken, as I do expect a recession for the British economy to come by the end of 2023. So during the fundamentals, we spoke about how the greenback has been strengthening following the release of the FOMC meetings, minute meetings, and upon which it's expected that the bank will continue hiking interest rates. Yet there's a different story against the Japanese yen. Note how it's moving in a sideways fashion. The Bollinger Bands have narrowed slightly, but it's trying to test this one. So the wick broke below, but the body did not. Now, the RSI is below 50, implying a bearish market sentiment. So I don't think this is dollar weakness. It's appreciated against all the other pairs. So why is the yen strengthening? I don't think it's either FX intervention by the BOJ. We've had no news about that. Instead, I think it's more about safe haven inflows. So during times of financial uncertainty, I believe that the Japanese yen, well, I do not believe it's a market phenomenon that the Japanese yen receives safe haven inflows from investors that is considered as a hedge against times of financial uncertainty. Therefore, this could be in part the strengthening of the Japanese yen against the dollar. It has yet to validate our sideways moving channel. So, based on a technical analysis and on a fundamental level, I do expect the Japanese yen to appreciate. Therefore, for the pair, we're maintaining a bearish outlook. Aussie dollar, note how it's still validating our downwards moving trend line as we had placed yesterday. Wick moved in between the two crosses, so upwards moving trend line and a downwards moving trend line. Having broken below our upwards moving channel, as we said yesterday, the technicals hinted that the pair would be going in a bullish market sentiment, so long. Whereas on a fundamental basis, we anticipate that the pair will be moving in a bearish scenario, so moving lower. As you can see, this did materialize. Yet, following the trade balance, the release of the trade balance figures for Australia, it appears that it gained some support and is moving slightly higher. But we maintain a view that on a fundamental basis, the Aussie is anticipated to weaken based on China's slowing economic recovery. Therefore, even if it is moving higher, I would not expect it to re-enter or break above R1, but rather a small market correction before moving once again lower, breaking below S1 and moving towards S2. Gold as well, as you can see, it's broken below our upwards moving channel. Now, gold is sort of a different story. So the greenback is strengthening, therefore it's more expensive to buy gold, which is denominated in US dollars, which is why you're seeing the weakening of gold. So as it's more expensive, less demand, therefore lowering in the price of gold. However, on a more fundamental basis, on a more fundamental level, worries of a recession have heightened. They're persisting. Some analysts and there's rhetoric on multiple news outlets that they're anticipating a recession. So I would expect gold to break above R1, despite breaking below our upwards moving channel. I believe that this is temporary, despite the technicals also showing a bearish market sentiment having bounced off the 50 RSI figure. I would expect gold in the long run to move higher, breaking above R1 and moving towards R2. Perhaps in the short term, it might break below S1, but I will not expect it to break below S2. Maybe breaking slightly before moving once again higher. So I'm going to be spending a lot more time on gold today, given the news developments surrounding oil, especially with the oil tankers that were attacked in the Persian Gulf. Excuse me, near Saudi Arabia that were attacked yesterday, as we can see. So gold. Let's move on to the 4-hour chart. As you can see, it's validating our upwards moving trend line. If we just extend it around here, it's broken above R1, is now moving towards R2. So this is resistance turning support. Worries of a recession could bring oil's prices lower. As a recession, if a recession does happen, there's lower demand, therefore lower prices for oil. Yet it appears that current statements made by Saudi Arabia's oil minister yesterday appear to have supported the price of oil. So it appears that the comments that Saudi Arabia will be monitoring the oil markets closely could counteract the UAE's um, desire to maintain current production levels. So what does that mean? Saudi Arabia is able to easily, in comparison to other OPEC countries, to easily manage its oil production. So they can essentially close the tap whenever they want to. So Saudi Arabia by itself could cut oil production simply just to drive oil prices up. They have enormous power. Yet the UAE is pushing back on this, and they're saying they're going to be maintaining their current production levels and have no intentions for future voluntary oil production cuts. So it appears that there's a battle of two Goliaths in the oil market. So Saudi Arabia wanting to increase prices, whereas the UAE wants to continue producing perhaps even more, which would drive prices lower. It appears that the overall market sentiment has been in favor of these oil ministers' comments, moving in an upwards fashion. And there's also been a report that OPEC is trying to get Mexico as well to join OPEC, which is an interesting development. If they do join, then OPEC will have more control over the world's global supply. Now, will they join? That remains to be seen. But even if they do join, then we might see oil moving hard towards R2, perhaps even higher. Yet, on a more fundamental basis, words of recession and slowing economic growth in China, the US, and the UK, with high interest rates and stifling economic growth, I would expect oil prices to move lower unless there is a massive oil production cut. So, this is more on a macro level. But having now support and resistance on a technical basis, it's a long, whereas on a fundamental, it's a short. So, I'd be wary about any new developments. Now, there's no upwards moving channel as of yet. It's a bit too wide to introduce. But what we do have to do is look for our resistance level, our new R3. And my R3 would be at 76.77. Instantly, as you can see, look at the candles, finding support, moving higher. As a matter of fact, excuse me, sorry, 2450. As you can see, turning point moved lower, bearish on a bullish candle. The closing and opening of these candles on the line broke below, moved lower, came back to test, and moved lower once again. So this for me is a valid resistance line at R3. So technically, it shows a bullish market outlook, whereas on a fundamental, it's a bearish signal. And lastly, we're going to be going quickly on Facebook. So for Facebook, as you can see, it's moving higher. Support one at $278.80. That's this one. So they're launching Threads. Yet I think that based on the data that Threads is wanting to gather, so if you go into the App Store and just simply look at what data they want to gain from consumers, is potentially the reason as to why it's not launching in the EU. Had it launched in the EU, I expect staunch opposition from regulators in regards to citing safety about how data is exported to the US, etc., etc. Something similar to what we've been hearing about TikTok and the China connection. So, which is why potentially why it has not launched in Europe for now. Yet it appears to be a potential competitor to Twitter. That remains to be seen. If you fail to gain market momentum in the first few days, and if there's negative news stemming from the application, so if we do see many users complaining about the data gathering requirements for the particular app, I would not be surprised if it fails to gain traction. I would say if many people express fears, which at the bottom line could impact Meta's share price, indicated by hashtag FB. So we can see an upwards moving channel. So technicals has a bullish market sentiment. Yet, if this product is a failure, I would not be surprised if it turns below, breaks below S1, and moves towards S2. Whereas if it is a success, breaking above R1, moving towards R2, and then R3. And that is it for today. Thank you for joining, and until next time.